Updates to crop conditions along with some previews of the acreage and grain stocks report upcoming from USDA. Hello and welcome. My name is Will Robinson, joined as always with the University of Missouri's Ben Brown here on Brownfield's weekly commodity market update. Ben, you're out and about once again. Where are you this week?
I'm in Nashville, Tennessee. Well, we're Franklin, Tennessee, actually. We've got some meetings down here with some lenders and some young producers that are going through a training program, or a leadership program. So I'm helping with that. Joanne, it's pretty nice here at the moment. A little cooler weather than what I was experiencing last weekend in DC.
Well, Ben, one of the advantages of you traveling all the time is getting little micro crop reports from different parts of the country. So any quick snippets that you saw from like 30,000 feet from the ground looking down?
Well, so it's hard to see crop conditions from the air. I will say, as we flew out of Columbia on what would have been that Wednesday. So last Wednesday when I flew out of Columbia, the thing that I think I just noticed was the amount of hay that seems to be out there. There's a lot of hay bales in fields, at least right around the Columbia airport. So.
All right, so gotta give a quick snapshot in the market, what we've seen running up from last week into this week. Looking at that nearby corn contract, July corn down 10 cents at 433, December corn down 12 cents at 451, July soybeans up 18 cents at 1175, so a little bit of gain back into that part of the market. Looking at that farther out soybean contract, it remained pretty flat at 1130. Soybean oil on a cents per pound basis down 0.24 cents at 43.49. Soybean meal by the short ton for July up $12.50 at 372.80. That wheat crop for July on the nearby contract down 39 cents at 552. Next year's July contract 2025 down 30 cents at 626. And then that West Texas Intermediate Crude Oil contract up $1.92 a barrel at $80.94. So, Ben, we saw some gains come back in some spots for soybeans, but continued losses in the corn front. Where you're really seeing the market picture coming into play this week?
Well, the wheat market continues to deteriorate. We're getting closer to where I think the bottom, or at least we could find a little bit of a resting place before maybe a little bit of a small rally in the wheat market here. Again, bullish stories all kind of dissipating. The wheat crop in Russia is maybe a little bit better than what had been initially reported. Not as good as the record that was expected a couple months ago, but still better than what was a couple of weeks ago. Same thing here in the United States. As we move through harvest, conditions continue to increase. That usually signals that the crop is going to get better and we're going to have more supply. And I think that continues to weigh on the wheat market. We've pretty much given up everything that we gained during that bull rally. And so I do think we find a little bit of support here on the bottom as maybe producers, stop selling into the market, waiting for some opportunities maybe later in the summer.
Well, you mentioned wheat continuing to drop, maybe finding some sort of support now down at a potential bottom. But looking at the corn and soybean sides of things, the condition slipped down a little bit from week to week here. But we didn't see too much of maybe a positive impact within the markets directly from that. So where are you kind of seeing corn and soybean conditions playing into the market at this point, still in the kind of early half of the growing season?
And the expectations were that corn and soybeans would deteriorate a little bit week over week. Dryness, some areas even in the Western Corn Belt are pollinating right now during this hot, dry weather. So the expectation was that it was going to deteriorate. Corn deterioration matched expectations. Soybeans a little bit more than what was expected. So you find a little bit of bullish support there in that soybean complex. That's kind of what's helped a little bit with this soybean rally that we saw, especially in the old, or at least in the some of the new crop markets, not as low as where we once were earlier in the week. So I sit here and I think that, there's opportunities for this crop to still have very strong production. The weather pattern seems to be giving us some support, at least when I say support for better yields and production. Because areas that have been dry are expected to get some rainfall in the next 10 days. Areas that have been extremely wet, it's expected to dry out some. So I think hopefully we get a little bit of moderation. The areas that need water get some water, but it is dry in the Eastern Corn Belt. That's where we saw significant deterioration in crop ratings. We also saw some pretty strong deterioration in the upper plains, Minnesota, South Dakota, and I'm going to go ahead and say it, Northwest Iowa, where we've seen strong flooding that's led to some flooded fields, unfortunately.
Well, and Ben, it really looks like a flip-flop from the early spring area into this early summer section. Earlier in the spring, there's a lot of wetness in Ohio and over into Indiana and different parts of the Eastern Corn Belt. And that's really flip-flop because we were seeing dryness in Missouri and Iowa. But now, over the weekend, we just saw those flooding conditions really hit places like Minnesota, down into Iowa, really that whole region up there, over into Wisconsin as well. So as you see that, how long does something like that really take to get baked into the market, or do you think a lot of that's maybe already priced in?
So I don't know if the market knows how to handle some of the headlines that we're seeing. So I'm going to largely talk about this flooding. So the expectation right now is about 10% maybe of the corn and soybean area is being impacted. That's significant. That's a big area. We have analog years, 2003, 1993, those stick out. 1993 sticks out not because of the loss of acres, but because the persistent and consistent rainfall really hit yield hard. We can look at Iowa and see, that during that flooding year, the yields fell, down 80 bushels to the acre. That was well below, their trend average in the 150, 160 range, 140, 150 range. And so, it was one of those things where it was the yield that hit hard, not necessarily the land. Today's hybrids are a lot better. I think our hybrids are better at handling drought than they are excess moisture. You get a lot of water like what we're seeing to where it floods, and you can end up with some severe disease pressure and just down stands, right? Having to replant or something like that. So I do think that we are early in this process. If the flooding stands and we see water on fields for a prolonged period of time, we're probably looking at some pretty large losses in production. But I don't think the market knows how to handle that quite yet. And we really haven't seen the market react all that much, to be truthfully honest.
Yeah, and it kind of does depend on just, I don't know, the assessment of the damage as we move forward. I know, different sections are in different points of their own growing seasons, depending on when things went in. Some soybeans have been in the ground for quite a while, and some have just been replanted. So trying to figure out where that balance is and kind of how bad the damage might be. But Ben, we're getting some fresh numbers from USDA coming up near the end of this week or heading into the end of this week, looking at some updated acreage numbers along with some grain stocks reports numbers. So Ben, how impactful is this, kind of in the middle of the growing season as we get a snapshot of the picture on, again, the acreage that we're looking at this year, along with the grain stocks that are currently kind of held back there?
I'll go out on a limb. This is my limb. So we get two big reports on the same day here at the end of June. We get the June 1 grain stocks and we get the acreage report, as you mentioned. I'm going to go out on a limb and say that the biggest surprise isn't going to come on the acreage side. It's going to come in the grain stocks numbers. Why do I say that? I define surprise as things that impact the market substantially. I think the market struggles to digest USDA's acreage numbers. They have been big drivers of the markets in the past, certainly thinking that they could be there. But I think there's a little bit more uncertainty this year in the grain stocks numbers. And that's why I think that we could see not only large stocks, but we could see stocks that are bigger than what market analysts had been anticipating. Let's switch to the picture of the acreage side here for just a second. So in March, when USDA surveyed producers replied to USDA that they intended to plant 6.5 million acres less than what many analysts had thought. This led to a very bullish reaction in the market. A lot of people have questioned whether we've lost 6.5 million acres of cropland year over year. This is one of those instances where producers, always talk about USDA being wrong. This is one of those things where it provided a bullish surprise. So if it does turn out to where we have more acres than we thought, it's going to cause markets to go down. The trade is certainly currently anticipating that we gain some of those 6.5 million acres back. Again, I don't think they're really lost. It's just a question of, are we going to plant everything? Do we have more hay ground out there? Is there larger CRP enrollment this year than what we've seen in the past? But the market's anticipating about another about another 1.5 to almost 2 million acres of corn and soybeans combined, most of that going to the corn market. If we do not see 1.5 million more acres of corn, that's going to be pretty bullish to the corn market. The soybean market sitting right around 86.5 million acres. That in itself kind of helps tighten the soybean supplies. We still have plentiful soybeans in that, but if we picked up some extra soybean acres in that in that market, that would be pretty bearish to the soybean market, because that really just gives us a lot more soybeans than what we need. So, in general, that's my pitch here, Will, is the market thinks that there is more acres that could be brought in, or it's not brought in, but it's just they were not counted for, or farmers did not report those to USDA. And so the market thinks that we'll have a few more of those. And I don't know if we will or not. I do think there was large amounts of CRP. I do think we have more hay ground after a couple of years of drought. And we could see a little bit higher prevent plant in the northern plains as well. But that's where I think I stand on the acreage report.
Well, and just sitting pre-report, looking at the possibility for what this acreage report could look like, it seems like corn has a better footing, at least to keep its floor, than soybeans. Maybe there might be more risk for that soybean floor to continue to fall down a little bit more. But I don't know what your interpretation is there.
Yeah, so I think both of them are probably susceptible to bearish pressures here. We could end up with few more, even 500,000 acres of soybeans would be a very strong bearish signal to the soybean market. The corn market, you probably are right. They have a little bit more of a solid footing, given that the market does anticipate that we gain 1.5 million, 2 million acres of corn. We'd probably have to gain 2.5, 3 million acres of corn for it to be overly bullish. Or bearish, overly bearish. And I just don't see that happening. So I would agree with you. I think the corn market's maybe got a little bit more stable footing as we head into the report.
All right, Ben. Well, looking through the rest of the week outside of those reports, what should farmers and ranchers really be paying attention to that could move the markets?
Yeah, so Friday's when those acreage and grain stocks report comes out at 11 a.m. Central Time. So that'll be a big report. A lot of attention around that. It's it's one of those things to where everybody's going to be interested in what comes out, and it probably will move the market regardless of what's printed, right? There's just that many people interested. Following that up, July 1, when we turn the weekend over, we get our updates on grain crushing, fat and oils crushing, crop progress again next Monday. So it's kind of more of a demand style day on Monday after the supply side on Friday.
Ben, always a pleasure to have your knowledge and information on the program here. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, have fun in Tennessee. I'm Will Robinson on Brownfield.